Hey guys, I hope you're having a wonderful day, or sunny Wednesday, wherever you are. Today we are coming here with another episode of Bullish Banter, and as usual, I'm joined by Rufas. How are you doing?
I'm doing fine.
I hope you have had a very interesting week since the last time we talked about Netflix.
Yes, I think the Magnificent Seven are beginning to show some good signs.
Yeah.
So as we head into the later part of the week, we'll be seeing the last earnings from Amazon and Apple. And I think that will be a key driver for volatility this week.
Excellent. As we record this on the 31st of January, final January of after 12 months or weeks, has finally come to its end. And today we are joined by international guests because that is how we try to make sure we get all the perspectives in regards to trading. And I have a very special guest by the name Sayed Bekab, Senior Vice President at Equiti Group, the overall mother of FX Pesa. And say hello to the listeners.
Hello, good afternoon, and I'm happy to be here.
Yeah,
Thank you so much.
How are you finding the weather in Kenya right now?
Kenya is amazing.
Yeah. Okay.
We wish we can take the weather away, but I don't think that we'll leave that for you guys, and then we'll come enjoy it every time we come around.
Anytime. Saeed is from Dubai, I want to believe, and I think his insight and of course his experience in this market can be valuable to whoever is listening, at least on the fundamental and macro side of investing and trading. And that is what we'll be covering today. We are taking over from last week where we were specific oriented to one subject. So this time we are going the macro way. Before now, at least we can see what is happening, given that being 31st, we also have FOMC. So maybe we can begin from there. It's an election year in the US. I know previously, the incumbents tend to, meddle a little bit on the interest rate to favor, whichever sides. I don't know if we expect significant influence from Congress to how the Federal Reserve make decision, or it will be business as usual, independence, that is. Rufus.
Well, I would say that the current administration has already tampered with the markets. So the natural progression of monetary policy responds to how the economy is performing. So in 2021, when US interest rates were hottest, I believe they topped at 9.1%. This is when we saw the Fed coming in quickly, hiking interest rates at the fastest rate ever. But then the high interest rates were expected to slow down the economy, but then that hasn't happened. That's why we literally saw stocks hitting all-time highs last year. And as we start this year, which is the election year, we are seeing the stocks pushing even higher. But then when you really look at the numbers, you start seeing the differences. So while the Fed has been hiking interest rates to remove liquidity from the system, the administration has been spending more and more, and this has increased liquidity within the US system. And as a result, a lot of this money has ended up in risky assets, mostly stocks, real estate, and this boom seems to be continuing, which is kind of deferring the eventual slowdown of the US economy. What do you think, Said?
I think, to be honest with you, this is the biggest election in history. Usually, US election is a big thing. And usually the election comes with massive fluctuation in the market. So the market just moves up and down prior to election, post, rumors, news, major announcement, things like that. And this momentum will continue for a while until we really, at the end of the election, we have either a re-elected president or a new one. I see this as a good and a healthy behavior for the traders.
Okay.
For one reason, because volatility means opportunity.
Yeah.
And opportunity means people are making money, and at the same time, people are losing money. So do we want this to continue? Yes. Do we want this to come peacefully into an agreement, election being, running smoothly and things like that? Yes. Is volatility good for the market? I'll probably say still yes. But one advice for traders is to really do your homework before you click on that buy or sell, because as I said again, this is a very volatile time for the market.
It's interesting you mentioned that we hope for a peaceful transition. If we remember, it was just 4 years ago, January 6th was not a pretty happy new year for the markets and obviously Americans per se because of the, not accepting election and all the scuffle. I would want to push it a little bit on the other side. We know FOMC will do their thing and it will be more or less independent. But there is the other factor which has been brewing and continuously, going on in the political scene, which is really, I think, any investor would want to look into it. The indices and the stocks, equity stocks, have been hitting all-time highs. GDP, based on the latest release, beat expectations. Earnings report continuously beating expectations. While we have still had this Ukraine war, whereby US is spending a lot on them, and there is that conflict between Republicans and Democrats on whether to allocate more fundings. And obviously, there is the AI. I think right now it's not Magnificent 7, it's more or less AI 5, or the 5 companies heavily involved with artificial intelligence. And now, from last year around August, we had the issue within the Hamas and the Israelis. Are these issues outside US expected to play a center role in at least the American politics? Because I know everyone has picked their side on the situation or the crisis. Are they likely to still have a driving effect on who might win?
Well, I think the current geopolitical scene across the world will most probably have an impact on the elections in the US. One key factor that we have observed throughout history is that no single president within the US, single sitting president, has lost an election when there was war. So now that we are seeing things popping around, you see this happening across the Red Sea, you see this happening across Ukraine, you see this happening in Jordan, Iran, then a lot of investors are currently very concerned that at some point we could be seeing an all-out war or a geopolitical conflict. And this psychologically tends to have an impact on voting patterns. So in this case, yes, we don't know what will happen between now and November, but then investors are always forward-looking. So if something is highly likely, then you start preparing for it.
Okay.
So we might see that being reflected in the current market valuations, especially in gold, as well as oil prices.
Excellent. Sayed, I have a question for you.
Sure.
Equity has been hitting all-time highs. And I think I will not be out of sorts to say that to some degree people are expecting some crash in the markets. Do you foresee, should this conflict escalate to a degree whereby, it causes some significant, destabilization, like the first breakout of the Ukraine-Russia war, that we might have equities falling down due to the ongoing crisis?
Again, you're talking equities,
Yes.
there is US equities.
Yes, US
there
equities in particular.
There is Sheikhs, there is Middle East, there is African equities. If I was a trader,
Yes.
I'll keep an eye on everything, because if you have a conflict in an area, you have peace somewhere else. So now with the ease of, let's say, if you're using FX Pesa or EGM securities, the ease of trading, that ease makes you move smoothly between markets, very peacefully, right?
Okay.
So as an investor, even though you think there is a crash that's going to happen in the US equities, for example, hypothetically speaking.
Yes.
But at the same time, you have brokers that offers you tools to move smoothly between the markets. So smart investors are with their eyes very close on what they trade and being able to move smoothly between markets. And that's the key.
Okay.
Because you don't want to get stuck in the US with US stocks are falling down and you want to leave, for example, let's say Europe or Sheikhs stocks, or you want to look at South African stocks being at all-time high. Whichever the case is, I think the ease of moving between markets might actually be a positive
strategy.
for investors to move to maneuver between markets.
Okay.
But going back to your question, do we expect the U.S. market to crash, equities, the equity market to crash? You're talking about the biggest market globally, okay, with trillions of dollars injecting to those markets on a daily basis. I don't see it crashing. I see volatility. I see a lot of ups and downs. But it will come to the point where it will be stable enough for investors to have the confidence to go back in it again.
So let's say the current bullish momentum is expected. We might maybe have a small correction, but it will not be like a 208 situation.
It's always the case. You're looking at the gold. We've been seeing gold in the 2000 levels. 2050, 2000 high. Now it's down. Now it's in the last week because of the geopolitical situations. It went up again. But it has a range.
Yes.
Okay.
Okay.
Can we say the gold will be at $3,000?
Maybe.
It's a maybe, right?
Yeah.
So the answer is maybe. But that maybe, who confirms that?
Time.
Exactly.
Nice. Because I think I'm interested in that because I think sometime last year we were looking at around July. It had almost it had a very nice buy now format. I think Rufas had done an analysis, and then I think at some point towards the end of October thereabout, we had a very sharp dip before the Santa rally began. So at some point, I think I'm coming to the conclusion that in this market, if things are good, just keep on riding that train until it says no. I think that is my opinion. Rather than waiting for some negative sentiments to drop the price, just trade as you see at least the markets. That was after people have internalized, okay, this war or this crisis is not ending today, it will not end tomorrow, and there is nothing you can do to bring peace. We will stay with it until people from both sides decide to and come to it conclusively.
I think the key difference, especially considering that we as traders do cross different asset classes. So one day you're trading Euro USD, tomorrow you're trading gold. Those asset classes, especially currencies and commodities, can have those huge swings. There's this trend this year, there's this trend next year. But then for equities markets, you realize that there's a lot of people who invested for the long term and they're not afraid of a short-term correction. So in that case, there are people who have put pension funds in, let's say in the NASDAQ, the SP 500. So even though you are anticipating big moves happening, let's say between now and the end of the elections, there's always that bottom line that these guys are not getting out. They don't have a second-best market to invest in. They really believe in the U.S. government, in the U.S. companies. So over the long run, we keep saying the number go up. So whereas there's such movements, I think it's important to visualize them more as opportunities rather than having the fear that the market is going down.
Yes. So I think it's being realistic with what the chart is telling you as opposed to your biases to the markets.
But again, we can. The chart is something. That's the technical is something, fundamental is something else. And now I think we're living in a more of a fundamental time where the news are the one who are moving the market up and down. The major announcement that comes from different areas of market hubs that moves and creates more volatility. But again, let's go back to the basic of traders, investors, ride the train. Do not let the train leave you behind. Because, I mean, we go back again to the basics. Volatility is an opportunity. Now, in order for you to take the opportunity, what do you need to do? My advice is be trained. Okay, stay on a demo account for quite some time. Maybe come join
the webinars.
The seminars. Talk to the experts. Have this daily market attitude inside yourself. When you wake up, what do you do? Okay, do you go TikTok or do you go CNN Money? I would probably go CNN Money first, and then look for the other fun stuff, because that's how you should start your day. Okay, CNN money will give you a perspective of what's happening around you.
Yeah.
If you are a trader, if you are a TikTok person, that's fine. That's just stay with all the the Afro beats and beautiful stuff and things like that.
Yeah, definitely.
But generally speaking, it's how you structure yourself. You wake up, you have a routine to follow.
Yeah.
To see what's happening yesterday.
And then you can prepare
For
for
the past
the day.
8 hours, you've been resting, let's say.
Yeah.
Okay, so did something happen in the last 8 hours? I can assure you, yes. Right? Because we have a 24 hours market open.
Definitely.
Now, wake up, have the routine, check the news, see what you like to trade, look at the chart, see the fundamentals, see the technicals, talk to the experts, join webinars, seminars. This will make your making call decision a little bit on the accurate line and more streamed
train.
and structured.
Yeah. Interesting that you mentioned the last 8 hours. I think it was yesterday evening whereby we saw Aramco say that they are shelving their plans to expand their oil production. And given where you're coming from, what is your view on some of the OPEC moves last year? Of course, I know there's been government intervention to reduce production so that they can show the price up. Are we likely to see such situation this year? Or the way the US has been doing record production, even today we are expecting the EIA report. Is it that the shift on who controls the oil price is now sort of on the paper traders of oil, or these governments who produce it are more to look out for?
Oil is a very sensitive subject, especially in the Middle East and GCC. Now, when you think oil, think about something else. Countries budget a year before.
Okay.
If you are an oil producer country, you're budgeting based on how much is the barrel, the USD. So those decisions halfway through the year, it's all linked to the budget. So if you're budgeted at 85, your goal will be try to cut production so you can actually go to the level of 85. If you're budgeting 70, you wouldn't mind
where it is right now.
Exactly. So just to answer that question in a very theoretical way, I'm not involved with the decision of the budgets also, but it depends on every country has a budget on its own, and oil producer countries, they budget on different levels. That's why you see a lot of decisions are coming in, the first Q, the second Q, the third Q, cutting, adding more production, so forth and so on.
Yeah. So we expect maybe this year, as much as they are budgeting and everything, and I think also so with the Aramco in particular, are we likely to see more oil producing companies, be it publicly listed or private, sort of reduce their production because of the demand is low, or is it that maybe for fundamental purposes you might want to look at other sectors or influential sectors of the oil markets?
If you're asking me for my own sense, as a trader, on a personal view, I'll probably say they might be a cut in production for two reasons. Shipping is difficult in the Red Sea, right? If you're shipping now in the Red Sea because of the conflict, because of what's happening, the shipment time zones they're being expanded. You produce and you're not very sure about
if it will reach the destination.
If it's going to reach your end user or not, that's the question those companies need to make. And I'm very sure strategically, if you think about it, human sense, most likely you can expect my answer.
Now, am I overreaching when I say due to truly what is going on in the Red Sea, of course, production cut, and I'm sure demand is not that high at the moment. Are we likely to see price reaching 80 at some point?
Well, for me, I'm very bullish about oil right now, and I'm considering several different factors that are impacting oil. So one, last week, we saw the S&P Global Manufacturing PMIs. So we had an improvement across board. So the improvement was majorly in the US. So we are seeing manufacturing improving. Manufacturing conditions are also improving in Europe. Despite having the current Russia-Ukraine war, countries like Germany, France, Italy are seeing an uptick in manufacturing activity. So the demand outlook is not that bad. In addition, this morning we saw China announcing a new investment to real estate in order to support the industry, which has been very weak since I think the last 2 years. So with out of construction happening in China, manufacturing activity improving across board, that's kind of bullish for me. So on the supply side, we are seeing the US has been expanding supply, and I assume this has something to do with the current inflation problem in the US. So if they really want to get inflation back to the 2% target, there seems to be a direct correlation between oil prices and inflation. So whenever you see inflation on the rise, most probably also the oil prices are on the rise.
Okay.
So if you look at when Biden started dipping his hands into the strategic oil reserve, it was that time that we started seeing inflation coming down. But then now that they are ramping up production, it seems kind of bullish for me. And then the last factor is the current disruption in the Red Sea. So the fact that shipping companies have to go all around, and some of these shipments are actually carrying oil, then it means that there's longer delivery times, usually 10 to 12 days more.
Correct.
Yeah. So this is leading to a bigger problem of supply, and when supply is cut, it tends to be bullish for oil. So in addition, if it so happens, and this is not something we are looking forward to, we only try to notice the key trends in the markets and see how those trends can affect the asset prices we are trading. If the US was to respond to what's currently happening in Iran, there's that allegation that the drone that attacked the soldiers in Jordan may have come from Iran. So if there's a response, especially from the pressure we are seeing, then that could further disrupt oil supply, and that could still be very bullish for oil.
Excellent. We're still staying with Asia, and one thing you mentioned, diversification and looking for opportunities. I think it was sometime, was it last week, where the Indian stock market became the biggest in Asia, outshining Hong Kong, right? And I think they're having the election. Is it on Friday? The election, Narendra Modi is seeking the election. And I think also Apple has gone to, to make their production there. Are we likely to see India in the next coming years, or the Indian stock market, let's say some of the companies like Tata and some of the biomedical companies coming to the limelight and, being a very good place to park in your cash, at least in the foreseeable future?
If you look at India, India is a very closed market because the way the market is structured is, you think about the monetary policy of moving funds in and out to India. It's a bit complex.
Okay.
But considering what's happening now in India, they came up with a free zone called Gift City. Gift City is more like Dubai Multi-Commodity Center in the UAE.
Okay.
Where investors they're trading in a free zone.
Okay.
On the onshore.
Okay.
Like within the country.
Okay.
This is very new. So linking this to the Indian equity market, which is it's a huge market space. I would probably say it could be one of the markets where money will be moving towards too. Okay. And when you are going to a market like India, you probably need to look at the top companies, as you said, Tata, and others. Why? Because they've had the market reputation for a longer time. Their production is seen by everyone locally, globally, regionally, and everywhere. Even today, we're sitting here in Nairobi. I'm very sure. If you drive around, you will see Mahindra trucks, and you will see Tata trucks, and you will see other equipments that is India manufactured. So they were able to break through, coming from local, going international, and have the international reputation in the name.
Okay.
And that's usually investors why would people trade Apple in the US? Why would they trade Google? Because it crossed the border of the US. It went already viral, international, and people will start believing. And even though if you don't trade the US stocks, but what comes into your mind the first thing when you think of US stocks? It's Apple, Google, Facebook,
Yeah.
and others.
Microsoft and their
Microsoft
Tesla,
and others,
yeah.
exactly. Yeah. So that's the same thing for India.
Okay.
If you are looking at the Indian market, you need to understand the mechanism of the Indian market because it's not as the US.
Okay.
It's not the same as the Kenyan stock market or others. It has its own flavor.
Yeah, interesting. I think also with their population serves as a good, marketplace. And I think if what we have seen in the last couple of years, the liberalization of their politics, of their financial system, and I think in the coming years, with them of outshining Hong Kong, I'm sure it is not just out of, many people or whatever, but of actually investors curiously trying to see if they can make something there, if in the other areas in the world is not really giving a good return. And money always follows opportunity. So like you said, if there's volatility there, I'm sure, I think there was some time last year whereby there was a company, I'm not quite sure of the name, remember the name, but they're involved in steel, and obviously also their judicial system has improved to ensure there is no corruption and the proper corporate governance, which has really, I think, boosted a lot of confidence in a lot of investors there. I don't know if you have something to add on to that.
I haven't covered India much.
I think I've been looking onto it due to the international cricket tournament from there, which has really, gained ground, and the revenues are staggering. So it makes you wonder if this small tournament of 10 teams is bringing in $1 billion plus. There must be something here. It's an interesting market
But
to look at.
it's a national sport.
Yes.
It's like football for us.
Yeah. You're saying football or soccer?
In the US, we say soccer.
Yeah.
But
in the world, we say football.
Here we say football.
Yeah.
In Nairobi, we say football.
Yeah.
Yes.
Okay. So, cricket it has a national identity.
Yeah.
Okay. Even if you don't play it,
You want to know what's
you're
happening.
attached to it.
Yeah.
Okay. Football is not.
Yeah. Thank you for that, Sayed. I think we have covered the major geopolitics. I'd like to wrap it up with, of course, what is happening right now, AI and everything that is going on in there. And we have noticed in the last 2 or 3 years, Biden has done the CHIPS Act, I think, twice or thrice, just to ensure that there is no competition with China or with Taiwan and everything. And we have seen, to some degree, China also trying to some degree, capture Taiwan and try to obviously exert some influence over what they do. We're likely to see maybe some sort of trade war, because we know with the Trump presidency, it's surely a lot of tariffs on their product. With the Biden, it's more of restriction. American companies cannot sell to or cannot buy from in terms of raw materials. Is this something we can look into? Because I know most investors now, even yesterday, if you're looking at Microsoft, you're looking at what is the commercial value of AI against all the other products you do. Are we likely to see some political influence on that sector and its development, of course?
Well, when you look at the tech sector, especially in microchips, there's this version of focusing on the supply chain. And I think the supply chain has been an important factor, especially considering the heavy investment that you have to make in order for you to be self-reliant in microchips. So right now, as we speak, Taiwan controls a majority of the high-tech microchips across the world. So if these guys were to curve and let's say halt production for a year, every other company will be affected. So, and I'm talking about all kinds of electronics, mobile phones, TVs, cars, any kind of digital device that uses high-tech microchips. So it's a country that is of strategic importance for the US and for the rest of the world. So the key development we have seen is that the biggest company in Taiwan has opened a new production farm in the US. So in that case, we are seeing the US increasing investments in microchips. And this is a key development. So it's one of the things that if I'm investing in tech and tech is using microchips, then at the top of my watch list, I would be like, how is the supply chain in this industry? So for any investor, it's something you ought to look into.
Okay.
On the other hand, when you look at other sectors, especially in the electric vehicle sector, there's been a very strong competition between Chinese manufacturers and American manufacturers, especially when you look at companies like BYD, Li Auto, Tesla, Volkswagen, and so on. So this competition is majorly coming from how they are sourcing their raw materials. So raw materials include rare earth metals, and the key constant factor for electric vehicles is that they use magnets that have to be very strong even at high temperatures. So these magnets are sourced from rare earth metals, but China is currently controlling more than 90% of their supply chain. So the rest of the world is just catching up. So that's why you are seeing companies like BYD, they're able to produce a vehicle with $10,000. It may not have the tech like Tesla, but then Tesla cannot narrow down its prices down to $10,000. And the price war that happened last year is causing a lot of controversies. For instance, the European Union has opened an investigation to see how China companies are producing at cheaper rates, whether they are being supported by the government or not. So it's becoming quite a key theme across the investing sector to understand who controls the supply chain in order to know who will dominate the market in the next couple of years.
Interesting. I don't know
That's
if
very
you-
true.
Yeah.
That's very true. As my colleague said, the Chinese manufacturers, they're able to maintain the prices to make it more attractive for retail. BYD being an example, Tesla being on the other side. Tesla is more of a high-end user because how much can you buy Tesla for? It's probably not 10,000,
40K
not 20,000,
plus,
40,000 plus. Now, retail is the market. High-end users, they still exist, but they're, the numbers are, with the inflation, the numbers are going down day by day.
Yeah.
If the Chinese will always stay in the competition, they have good resources to raw materials. They still manage to sustain and maintain the prices to make it more accessible for retail.
Yeah.
And that's the key. The success is retail.
I think we can say it's safe to say that if they go the way they are doing in terms of ease of access, ease of acquisition, and obviously maintenance, BYD can be the Toyota of the EV market. So it is something definitely to look out for should the green, campaign continue to be more, mainstream as opposed to an exclusive of the few. Maybe as we wrap it up, I don't know if Rufas, you have something to share with the audience, at least for the February, the month of love, apparently.
Valentine.
So as we record this session,
Yeah.
today is Wednesday the 31st. This is when we are having the US Federal Reserve make a decision on interest rates. So far the Fed futures market is already pricing in a 97% chance that the Fed will not change interest rates today. So the next meeting will be on the 20th of March. And there's about 53% chance that the Fed will still hold interest rates higher. So with the Fed holding interest rates higher, there's a good likelihood that the dollar will remain the dominant currency. And by dominant, I mean the dollar might remain strong for the foreseeable period. Of course, the Fed decisions will be data-based. That's what they said. So they're looking at the statistics in the economy and using that to make the decisions. So that basically pushes the reactions to the data. So as investors follow the various data or reports coming from the US, and this ranges from CPI reports, job market reports, GDP, manufacturing, and all that, everyone will be trying to shed an angle on whether this is consistent with the Fed or whether it is not consistent with the Fed, because the Fed decision reigns supreme. But then from the data we have as at today, it indicates that interest rates might likely stay higher for a longer period, maybe extend into the second quarter of this year. And as a result, we could be pairing a strong dollar with much weaker currencies. So I think there's really an opportunity there, especially when you compare with the monetary policy across other economies. Yeah.
Interesting. So rates will be higher for longer. Equities and indices will be higher for longer, I guess.
I would say might, not will.
Sayed, maybe your closing remarks and advice to the traders.
Thank you so much. As we approaching the months of love and Valentine, so I appreciate what actually happened in January. I think it was a healthy process.
Yeah.
Volatility and everything. Remember, February is a very short month, being 28, 27, 29
Yes.
this year.
Yeah.
We added one more day.
Yeah.
Okay, so 29 days being the market calendar. Take out the weekend, so you're not really looking at as many days as Jan to trade.
Yeah.
But we expect it to be a fruitful month for a couple of indices and a couple of commodities. Keep an eye on the gold as it moves up and down. Keep an eye on the Euro USD. Reach out and come attend a couple of webinars, seminars, learn more about the market. We're available and we're here for you.
Thank you very much. I think we have covered some degree of geopolitics that might, escalate or de-escalate in the coming months, hopefully for the best. So maybe the next time you're around, we shall have a different situation in the
100%.
world.
Thank you.
And of course, appreciate your insights through.
I'm
this
happy to be in
podcast.
Nairobi, to be honest. Nice weather, nice people, nice food.
What is the best food you have eaten so far?
Everything from the sushi to the local dishes, everything.
Very nice. Hopeful for more. That has been all from myself on Bullish Banter. We shall be having one special, of course, Twitter Spaces sometime in the middle of the month, at least in regards to some of the developments that will be real-time basis. So remember to tune in to all our social media channels, of course, Bullish Banter across all platforms, as well as a YouTube channel for Rufas sessions every day on at 11 a.m. for Market Snapshot. In case you intend to open an account, you can always click on the link below to get yourself a practice account, a demo account, as Sayed said, just to educate yourself and hopefully in the long run you're able to get some income along the way. Other than that, adios.
Adios. Goodbye.